Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting the Asian Session Live Market Analysis webinar for this particular week, explaining the forecast, the derived forecast for this week. And today we are on 24th of August, the week beginning time on Monday between 5 and 5:30 GMT. I will try to explain to you what is the expected market moves in this week, and also we'll do the market reading and the understanding of the trading strategy during this particular process or during this webinar. Now, first of all, we'll go into the market. As I was explaining last Tuesday during the Tracking the Forex Market Together webinar, that I was explaining that they wanted to hold GBP and they wanted to gain levels in the case of euro, and also they wanted to drop in the levels of USD yen and USD CHF. That's what they had done it. And Friday, they quickly gained the levels in the case of euro, and then subsequently today again, they just quickly went up to the psychological level 1.15. So a quick rise is always a false move. And this, they have done it when there are contrarian moves happening in the market. See, euro is showing positive net change, whereas GBP is showing negative net change. So euro is making USD weakening move, whereas GBP is making nominal USD gaining move. But Australian dollar is showing very big downward move as a big USD gaining move. Also, Canadian dollar, which is making the USD gaining move. Whereas Swiss franc, USD CHF has made a drop of 40 pips. That is, it is showing the USD weakening move. So you come across the mixed moves happening in the market and for the week beginning. So this particular week, 24th to 28th, is the last week of the month. Then afterwards, followed by that, we have only 31st of August, that is next Monday, followed by that, the first week of September. So they are expected to make the trend reversal move during that of this week as well as the next week. That is a month end and the new month beginning time, they are expected to make the volatile moves in the market. So whenever they are going for such volatile moves and the contrarian move, we can only do the swing trades and no position trade. And they will make either way quick moves in the market. So one such example is that today's quick rise in the case of in the case of Australian dollar, and quick drop in the case of, quick rise in the case of euro, and quick drop in the case of Australian dollar. And then after forming the new high, after breaching the initial lows and the initial high, they quickly went up in the case of euro and reversed, dropped in the case of Australian dollar and reversed. Whatever may be the excuse, they use the data release as a trigger, then subsequently make such extended move. And then later on, you will find that happen to be an extended stop and move, but on the upside in the case of euro and on the downside in the case of Australian dollar. And later on, they will just reverse the market. So you need to understand that all such quick moves are false moves in the market. Quick moves are mainly to create the fear to that of the traders and also to hit the stops and gain quickly the levels to offload all their buy positions. So that is what they quickly rise to offload all their buy positions, hold and induce all the short sellers to come for a short covering and distribute it to them. So when the market is rising, people might be thinking that higher level the traders are buying, but actually the players are holding and distributing, booking profit with regard to their lower level buy positions. So we are normally misguided by the technical analysts that market has gone up, breached all the resistance and gone up. So it has got great potency to go upward. So buy and sell. But after buying, we find that the market is not going up and suddenly the market drops, then they will say, no, the condition is changed. The US economic condition is changing every second. That is why the market is nervous. So it just dropped. That is how they will just give interpretations to that. So understand that this week they are going to bring in big volatile moves in the market. So today, 24th, swing and slide moves are expected. Already they have done the slide in the case of Australian dollar and the drop, and they will also do it in the case of euro and GBP later on. Then again gain the levels in the case of euro and nominally in the case of GBP and drop during the US session. And this will be the first volatile move in the market for the week beginning. And later on, you will come across swing and slide on Tuesday, and then swing and drop on during that of the Tuesday European session, and then swing and rise, quick rise on the upside during that of the US session. Then again, they will make a drop on 26 in the case of Euro and GBP, and that of the US session. And then on 27th, they will make a drop and then rise during that of the Japanese session, and then swing and slide during that of the European session, and swing and firm up. So always you will come across every day the volatile move on the downside as well as the upside. Then on Friday, 28th August, they are expected to make the swing and slide during Japanese session and continue to rise during the US, European and the US session. These are all the expected market moves. Last week, you would have noticed the market has moved in line with that of the expected market moves. And so you can use it as a guiding factor and try to understand that they are going to bring in the volatile moves in the market, but still you'll come across the quick upward rise in order to offload positions by the other players. And also you'll come across that next week also the market is expected to make such volatile moves. Then with regard to the levels, so euro could just gain further levels, and already it has gone up to that of 1.1499, and they are likely to gain further levels. They are likely to gain further levels to 1.15, and they have gone up to 1.1499, and probably they may just show psychological level 1.15 during that of the European session and then start making the slide. And then the downside potency is 1.1175. Then GBP might be making a slight downward move, but it has got more potency to go upward. And they will make such contrarian moves in order to handle the European crosses. And in the case of yen, they could make one extended downward stop and then continue to gain the levels. And similarly, in the case of CHF, they could make a brief downward stop, and if needed, already they have done it. So 93.68, and then they are expected to go up to 97 level. Then in the case of Canadian dollar, again, they have just gone to 1.3250, and then from there they are expected to make the slide. So, all you will come across. Then in the case of Australian dollar, they just breached the initial low, came down and holding there, and they are expected to go higher. So when GBP and Australian dollar could go higher, at that time euro could make a drop. That way they will be able to handle all the Aussie crosses. So keep that in mind. Whenever you find that market is showing mixed move, euro is showing USD weakening move, and Australian dollar is showing USD gaining move, they are making mixed move or the contrarian move, mainly to handle the crosses of the commodity pairs. Then coming to the market reading. So euro formed the low 1.1370, 1.1451 is the high. They just breached and went up to 1.1499 and started lowering it. And currently holding slightly above that of the initial high. And after making one more gain during that of the European session, they could make the drop, because they want the traders to buy euro at the highest level, and Now, the technical analyst will also encourage traders to do buy and sell trade because it has breached all the resistance and gone above. So people will say that it has got further potential to go to 1.1618 like that. And so any dip, the traders will think it is a good buy opportunity, but the players are expected to continue to make the drop. So keep in mind the players create the market sentiment and they will make the charts appear for the technical analyst to give a different type of predictions. And once the traders commit such positions, then they reverse the market. That you have to keep it in mind. Then GBP, the low is 1.5661, the high is 1.5698. When Euro has breached the high, GBP has not breached the high. So they are still holding it in that negative net change and they are likely to gain some make upward stop and during the European session and start making the slide. Then in the case of the yen, 121.09 as the initial low, they just breached and came to 120.73 and holding below that of the initial low. So already they had dropped about 100 pips. These are all nothing but handling all the crosses in a big way by making the contrarian move. All you know very well what they do is they handle initially the crosses during that of the monthly trend reversal time. Then later on they come to that of the majors. So it is a sequential trend reversal to start with the crosses of the commodity pairs, the commodity currencies and the crosses. That is why you come across extreme move on the upside in the case of Canadian dollar, extreme downward move in the case of Australian dollar, and later on they will reverse it for the week. And then you will find that the yen and yen crosses will react to that. Similarly, you come across yen has already dropped. They will make such massive moves, extended stop in the case of yen, and then later on, in order to handle the crosses of the yen, and later on they will just handle the majors. Then after handling majors, they will handle finally the European crosses like Euro GBP, Euro CHF, and GBP CHF. Then in the case of CHF, $94, the initial low, they just breached, came down to 93.68 as an extended move and gone above 94.12. So they are already reversed in the case of CHF. When the market is thin volume and whenever they come across plenty of stops below, and they just go and hit all the stops and just reverse it. That's what they have done it in the case of Euro also. Then 94.82 is the high, they have not reached it. And in the case of Canadian dollar, once they stop cutting the new low for more than 30 minutes, they are unlikely to cut the stop. After 2 hours, they will go above the initial low and come below the initial high, the case of Euro. Then Canadian dollar, 1.3178 is the low and 1.3243 is the high. They just breached the high and made a brief upward stop and around 32.56 and came below that of 32.43. So it is likely to come down. It's a clear upward stop and they are coming down. In the case of Australian dollar, 72.35 is the low. They came down to 72.01, still holding below that the initial low. So they could make during the late session a brief downward stop and if needed below that of 72 in case if there are plenty of stops. Otherwise, they may just make a false move up to that of 72.05 or 72.03 and then start reversing that. And 73.12 is the high and they are likely to breach it during that of the European or the US session in the case of Australian dollar. And now they created that market feel because of China, has come down, but later on you'll find people will forget about China. They will say it is the question of US dollar. And so Aussie has become stronger against US dollar. So they simply relate it to China and bring it down, relate it to US dollar and take it up. Ultimately, the traders become fools. So, as far as trading is concerned, So we note down the initial lows and the highs around 3:30 GMT and try to find out what sort of moves they are doing it on the upside and the downside. And if it is an upside extended stop and or extended move for 2 hours, they are, if they don't breach the new high up to 2 hours, then they are likely to reverse the market and make the intentional move on the downside. So watch for 2 hours and wait for another 30 minutes. If they don't cut the new high, you take a sell position in the case of euro. They don't breach the low in the case of Aussie or CHF, then you try to take a buy. That way you can identify the type of moves they are doing it and still use the hedge order to limit the risk. Keep 30 pips hedge order to limit the risk. Once the position makes profit, you keep stop at entry and remove the hedge order. The event if it is filled, the hedge is filled, you try to find whether the hedge is making profit or loss for 30 minutes. If it is not making profit for 30 minutes, understand during a brief stop and that hedging got filled, you close the hedge and keep 20 pips away or 30 pips away the hedge order, then they will start reversing the market, move it in your favor. You can trail the hedge order closer to that of the buy position and keep stop at entry in the buy once the position makes profit and remove the hedge order. So you try to use the hedge order to limit the risk and also do either way trading in the event if the hedging is making profit. Now, these are all the market timings. So understand they handle only two pairs at a given time and the spread has to become more than 40 pips. Only then you can handle that. You can identify those currencies and take positions. Now you find in all currencies, they have made the spread more than 75 pips. So that means they are very aggressive in order to make money in the crosses and also in the case of majors. So once they become aggressive, then they will try to see that the traders are massacred. They try to make a quick upward stop and trigger all the stops and make money. Then the traders think that it is better to do buy and sell trade, buy on the dips. And also when the support is not breached and if it is not going below, then they will try to buy. They will think that GBP is weak, whereas euro is looking strong, so it is likely to go up. Then they will buy euro and neglect GBP, but GBP will go up, euro might be coming down without making profit. So they try to correlate the currencies. The traders tend to correlate the currencies with regard to the fundamentals or technicals or whatever it is. But the players know where the traders have committed positions. If the traders have committed more long positions in euro, they will make a drop. If more short positions in euro, they will make one more rise and hit their stops. So, which is better? Reading the intentions of the players, what they intend to do next is better than that of simply trying to follow some of the theoretical derivations, which is disregarded in the market as a practical situation. That is why you come across always a clash between the technicals and the fundamentals. When you follow the fundamentals and take positions, technically it is weeded out. When you take technically a position after the rise, it has breached all the supports, resistance, and gone above. You think that it is a good buy level above that of the resistance. Resistance turns support, then it drops. So you become distressed. So that is what the players want. So that once you become distressed trader, you do wrong trades. When you lose your patience and do wrong trades, the players are the gainers. Okay, these are all the market timings. So understand that early and the late sessions, they handle the majors, and mid sessions, they handle the crosses. So now we are in that mid session, 5 GMT to 5:45, 5:30 GMT. So afterwards, they will make the late session, the quick moves in the case of majors. At that time, you try to identify the type of moves they are doing it. If it is an extended move, the opposite will happen as a follow-up move, and that will be the intentional move. Once they start making the slide as an intentional move, it will be for 2 sessions and the start of the third session. understand that, and try to capitalize the profit. Identify the moves, then you will be able to really maximize the profit. So if there are questions, you can ask me the questions in the chat window or the question answer window. Then I'll answer to those questions. Another 10 minutes to go, so you can ask the questions. And rather question, GBB, have we seen the low for the week? Can it revisit 1.5525 area mentioned in your presentation? Yes, it is likely to make an extended downward stop and before making a rise. See, when they want to make a shift in trading zone, they have to invariably make an extended downward stop, and afterwards only they can make a rise. Then they can go to 1.59, 1.6061 like that. Now what they are doing it in the case of euro is either way stop and make it downward stop and afterwards upward stop and again trade in the range. So if you look into the chart, it will be a small range. Gradually the range will increase. The high will become higher, then later on low become lower. That sort of moves they are doing it now in the case of euro. So if they want to make shift in trading zone, they have to make an extended downward stop and then make a rise. Extended downward stop is likely to be for about 150 pips. Then Michael has got a question. Do you think USD will go lower than it has? Yes, it could make a brief downward stop and before making a rise, probably to 120.67 or 50 area. Then INI, thank you for your forecast. Last week you informed us 1.2. Okay. And any other question, please? Okay. Vikrant has got a question. For New York session, when should we take market reading? No, market reading is for the entire 24-hour cycle, that is following the GMT time frame. So for all the sessions, we have to note down the initial lows and the highs by 3:30 GMT. They start setting the low by 2:30 or high by 2:30. Then the opposite will be set by 3:30. Then afterwards, that will be used as a reference level for the entire day till the close of the US session. Hope you are able to understand. Then Radhakrishnan, Euro GBP may visit 76 area. Yes, Euro GBP will gain to 74 to start with. In monolith, can you show the slide of the expected range? I will show the slides again. Currently, we are seeing the intentional move or extended stop. All quick moves are extended moves. Quick moves are namely stop-ins, false move, and extended move. Only intentional move is a slow move. Afterwards, after making one quick knee-jerk reaction, they make small swings near that of the high or above that of the high, below that of the high, and things like that. That you should not take into consideration. You have to take the quick move after forming the new high. They stopped cutting the new high for more than 30 minutes now. Up to 2 hours, we have to watch because they are still holding above that of the initial high, 1.1451. So then you have to find out whether it is an extended move. Then if it is an extended move, after 2 hours, they will start coming below that of the initial high and start slowly coming down. If they make one more rise, then if it is a slow rise, then it is an intentional move. If they cut every 30 minutes the high, then it is an intentional move on the upside. So identify the move so that nobody need to give you a forecast. You'll be able to identify what is happening in the market. All quick moves are false move. Keep it in mind as a thumb rule. Then Chan, Is there a possibility for Australian dollar to go below 0.70? It is very, very unlikely, sir. Then, Monali, can we take sell position in euro then? Yeah, you watch for 2 hours, I told you. Afterwards, if they don't breach the high, what they said, and when they firm up during the late Japanese session, because if you want to take position in the case of majors, always take during the early or the late sessions. Keep in mind that the timing is very important for you to take position. If you are taking position in the case of majors, early and the late session alone, you take position. If you are interested in trading crosses, you focus during the mid sessions. You will find really profit booking becomes possible. If you simply think about the level and try to enter into the market, then you lose money. And unfortunately, in technical and fundamental analysis, you do not come across any mentioning about the market timings. And the only timing what you get it is the data release time. That's all. Other than that, you don't get anything. But actually, the market timings are very vital for you to make successful trades. Then you informed us that 1.13 will be skipped for euro, and it has happened. Yes, that's what. They simply gain the levels, but unfortunately, they are not done the downward extended stop and in order to make a shift in trading zone. It is either way stop and they are doing it now. So you have to identify what move they are doing it. May I ask you how you make such calculations? That is what. See, making such calculations, you've come across the non-trading zones. When they are shifting the market from 1.12 to 1.14, you come across 1.13 becomes a non-trading zone. Quickly, they gained the levels on Friday and continue to gain the levels on Monday. That's all. Anybody who has taken the sell position there, they're all trapped. They have to come for the short covering. Then afterwards you will find they will revisit that. But if it is a shift in trading zone, then they will continue to gain it up to 1.18. So that if you trade without a hedge or without a stop, your equity will evaporate just like that. That is why the timings of the market are vital. Many traders think that, okay, when it is range bound, you can try without a stop and automatically you'll be able to wait for 2-3 days and book profit on the position, whether it is a sell or a buy position. But if they make shift in trading zone, then you are vulnerably trapped if you hold a wrong side positions. Especially that becomes very true with regard to the crosses. They gain about 700, 800,000 pips in a matter of over a week. That's what they had done it on last week in the case of GBBN from that of 194 area, they dropped it to 191, just like that. Then he asked, AUD is the weakest major and Euro AUD cross is up 300 pips today. Do you expect a reversal? No, they are expected to. They already handled the cross, as I told you. AUD is unlikely to come down again because for 2 hours they are not breached the low. So they will just gain the level in the case of AUD. But when they drop GBP, Euro, and AUD, Euro Australian dollar is likely to come down and then they will try to take it up again. They know how to trap the traders because they have done the lower level consolidation with frequent downward stop in the case of Euro Aussie and GBP Aussie, they are likely to gain the levels. In Mario, do we need to rely on MACD or RSI before the entry exit of this market? Kindly follow them and do it in the demo trading consistently for about 3 months. Then understand the limitations. Then you can take your own decision. Because if I tell you that don't follow them, because being a statistics professor, I am telling you not to follow. Why? because the market manipulators are trying to emphasize that the traders should use such statistics to estimate the supports and the resistance. But what happens when the traders commit positions, the players make a differential move and say that it is because of fundamentals. And if you take following the fundamentals, the position, they will simply say it is because of technicals the market has reversed. So ultimately, what you come across is after following all the conventional statistics and all the conventional fundamental studies, when you commit positions, when the herd of traders commit positions, the players find a great opportunity of reversing the market and grab the money. It is very simple. Either the stops will be filled. If they don't use stop, then margin call. Simple. In Vikrant. Do you have any reading on what happened in the world stock market? I do give the forecast for the world stock market, but I don't believe in giving a write up, what is happening and things like that. They are all storytelling, which is of no use to that of the traders, and that may convince the traders that the market has gone against them. That's all. And simply listening to the stories all the time, the write up and one or two pages, articles, etc., you can probably spend time and you can say that they are all educative, but then you should not come for trading. You will learn about the market, you will learn about economic conditions of the world, how the economic conditions change from time to time. All those things you can learn, but don't relate it to trading. There comes the biggest problem. Yes, sir. Aussie has just risen about the initial low. So now if it does not go down for 30 minutes below the initial low, we can take long. Yes. But still use the hedge order to limit the risk. Once the hedge is not filled, keep stop at entry and maximize the profit. Then always be a systematic trader. Don't become emotional trader. There comes the biggest problem. Once you see a good profit and you just laugh and call up your friends and say that, no, I'm making about 200 pips, 300 pips in my position. But in a matter of 30 minutes, they may simply reverse the market and all your profit might evaporate. So out of greed and panicness, the traders lose the money and don't do it again and again, the same foolish thing. Always use the trading strategy to limit the risk and maximize the profit. And what could be the lowest expected level for euro yen this week? I given the levels for that of the majors. From there, you can derive when euro comes down to the lowest level and USD yen comes down to the lowest level. You can find out because I focus only on the majors for the small traders. And small traders, when they commit positions in that of the crosses, they do not know how to handle it. And invariably, they evaporate the money as quick as possible. See, because they find their friends are making big money by taking positions in crosses. And if they are on the right side, they will make big money. And if they are on the wrong side, they will lose big money as well. And in the market, the conventional thing is if you lose money, you don't tell anybody. If you gain money, you just call up 10 friends and say that I earned 120 pips, 150 pips, and things like that. When you lose, you keep quiet. No, that is the tendency of the human being. We don't accept failures. So, in such a situation, focus only on majors if you are a small trader. And Euro and GBP, whether you have got a sell or a buy position, if you wait, you will be able to book profit and you'll be able to trade without a stop on many occasions, etc. But don't do the same thing with regard to the crosses. Your account will blow up just like that. Then see wealth. May you show the weekly expected? Yes, I will show the slides. Okay, here you come across the forecast for this week. Meanwhile, I'll find out whether any questions are there. in Radhakrishnan. Has the shift in trading zone has occurred probably in euro? See, shift in trading zone, normally they do it in all currencies simultaneously, sir, but not only in euro. So once we understand their total intentions, we will never be misguided. Then monolith. USD CAD rising all along euro was made only to rise euro CAD cross. You are right. They are handling the. See, the sequential trend reversal starts with that of the commodity crosses. That's what they are doing it. The big trend after the shift in trading zone. Will this be the new trading zone? Yes, in case if they make a shift in trading zone, they will go up to 1.19 in the case of euro and come down to 1.15 and swing. So they will not revisit 1.14, 1.13. Okay, now forecast. Then the ranges this week expected to happen. Okay, fine. So I'll wind up the webinar. I take this opportunity to thank FX Trade for the facilities provided to present the webinars, and you people who have come here to listen to the webinar, and kindly use it as a guidance and calmly think and understand what I have said is sensible or not, and then later on try to take positions. And also, while taking position, follow strictly the trading strategy, because only when you follow a disciplined trading strategy, you will be able to consistently earn money irrespective of the market condition. If you use the hedging, what happens? If the market goes against you, you are hedged. If the market moves in your favor, you book profit. Then you know how to handle hedge. Then it is a win-win situation for you. So kindly understand that and try to come back on 27th August, Thursday. We will review the forecast, what I have given it, and find out whether the shift in trading zone hero has happened or not. It is just either way stop and move. Thank you, one and all. See you on Thursday. Wish you all very happy trading and a happy week.